I got big news for you guys. Today is the first day that allows people to trade with 4 times leverage. Before, you needed $25,000 to day trade, but now you only need $1,000, $2,000 in your account, and you can start day trading stocks. Let's say a stock is $100. Now you can actually buy it, and it's only going to tie up 25% of your buying power. So you, in essence, have 4-to-1 leverage. So the rule was just released today, Monday, July 13th. The capital requirements. Typically, you needed 50% of your capital. Starting July 13th, now you only need 25% of the price of the stock to buy it. But as long as you exit the position before the market closes, that's all you need to tie up your account. And if you know how to do it right, you can earn up to maybe 1% a day. That's the method. If you could just do 1% a day, which is $10 a day. So now that we have just $1,000 and the margin has dropped intraday, what type of trading can we do to actually take $4,000 and just generate $10? Remember, 1% of 1,000 is just $10. But now you have $4,000 to generate $10 profit a day. That's the game, folks. That's what I'm trying to teach you that you can do. It's not rocket science. If you could buy low, sell high, 3-to-1, now you can actually use the leverage in your favor, right? Use this 4-to-1 leverage. When the stock makes a $1 move, you make $4, right? But make sure you exit by the end of the day. Most people, leverage cuts both ways. It can really help you and accelerate your wealth, or it can just wipe away your capital and then you start from zero. You're just making 1% a day. But think about it, 1% a day is 20% a month. If you use compound interest, you're doubling your money every 3 months. So $2,000 becomes $4,000. $4,000 becomes $8,000. 8 to 16, 16 to 32. Can you imagine growing a $2,000 account to $32,000 in just 1 year? But you got to educate yourself. You got to get this specialized knowledge. You got to have the discipline, the fortitude, the perseverance it takes to go through winning, losing, because trading, you're not going to be right all the time. Losses are inevitable. But how do you deal with it? Because as a trader, we're nothing more than a professional money manager. We're a professional risk taker. We know when to take risk. We know how to take risk, and we know how to respect it. Because the 1 minute you don't respect the risk, the market is going to crush you, and then you're starting from ground zero. But if you don't educate yourself, you're going to lose it, and you're going to be part of the 99% of people who lose money day trading options. I'm treating this like a business, not like a gamble, right? We don't want to gamble in the markets. Our framework, our edge is the math. If we have a positive expected value, then you just got to place small trades over and over again and let the probabilities play out. You're going to lose some, and you got to accept it. They're just inevitable. And then you gotta let your winners run. That's how you make money in this game, folks. That's the key to wealth. That's the key to making your money compound by just doing small, doing often, and let the math do its thing. Filled, right? So we sold the 71 filled, has been submitted. We are in this position. So what is this saying? This is a 15-minute bet that says if this thing can stay below, we got a $35 credit. Remember, when you sell something, you get a credit of 35 cents. And this is the risk graph. So this risk graph says that if this thing can close anywhere at 751.50 or lower, this is a defined risk trade. What that means is that no matter how high this thing goes, the most I can lose is $65. I already defined the trade. I already said I'm gonna let this thing go all the way to expiration. No matter what it does, the most I can lose is 65. So why am I gonna sweat like, oh no, I should get out now? Like, there's no point in trying to save another 10 cents, right? $10. So this is the beauty of emotion-free trading. Did not quite get there, but look, my max loss did not occur. It was right here. So instead of taking the max loss, I actually only lost $20. See that? this is where the price closed. This here is the line at expiration. See how it's solid? That means wherever the price closes at, this tells you how much you win or lose, right? So that means that I'm only losing this difference, 58 minus 35. I know I'm doing the subtraction upside down, right? It's 23 bucks. I lost 23 bucks on this trade. That's how you make money in this game, folks. That's the key to wealth. That's the key to making your money compound, by just doing small, doing often, and let the math do its thing. All right, everybody. If you like it, to help me spread it, leave a comment. Let me know what stocks you want to see next. And I'll see you in the next one. Peace.